Thank you and welcome to our CPR conversation series. I'm delighted to be here with Barry Herman. Barry is a former visiting senior fellow and faculty in the graduate program in international affairs at the New School. You've spent over 30 years or almost 30 years in the UN Secretariat and leading roles in the FFD process, being humble, but and you wrote one of my favorite papers on innovative finance. Half a century of proposals for innovative finance. This was a 2013 paper in DESA. And now I understand you're writing a book on the history of the financing for development process.
True.
So I couldn't have a better person here today to talk about the history of innovative finance in the United Nations. So first, thank you, Barry, for being with us and for your time.
My pleasure.
Great. I think we should just start with the concept. And almost every UN document today has some reference to innovative finance.
Right.
You've argued that the term innovative finance has become so elastic as to lose substance or meaning. What did the term originally mean? How does that differ from how it was used today?
Okay, well, I don't think there's ever been an attempt to define innovative financing, at least politically. I mean, it appears in UN documents and negotiated documents. But, so I guess the thing to do is to ask what's not innovative. The opposite is what's, okay. So what is standard? And we're talking about public finance, we're not, okay? So there's really two categories. There's current expenditures, let's say teacher salaries, and then there's investment, building schools, okay? They're financed differently, traditionally. Teacher salaries would be financed out of taxes. And there's a whole range of standard taxes. Income taxes, value-added taxes, user fees, and so on. So an innovative tax is something unusual, an unusual type of tax. Now for the investment, for the capital expenditures, that's different. Here, the idea that is standard in public finance is that the beneficiaries should pay. Okay, so that would be people, say, who go to school for the life of the school building for 20 or 50 or 100 years, okay? So it would not be fair to ask the current year's taxpayers to pay for everything. So the standard way is to borrow the money and pay for it over time through taxes or user fees and so on. And then, okay, who are you borrowing it from? You're usually borrowing it from the private sector. So either there are banks that fund these things, infrastructure investment, and the banks get their money from depositors or investors, or bonds. And in some countries, like the United States, standard way is municipality issues bonds. Could be a state or whatever, it doesn't matter. Okay, so those are standards. So what's an innovative kind of capital finance? It's innovative if you're from the West, but sukuk financing is Islamic Sharia compliant financing, which can be used for financing infrastructure or schoolhouses and stuff like that. And the idea is that under Islamic law, collecting interest as a fixed interest obligation is not allowed. But you can share the benefits, share the profits of an investment with the people who lend you money. And so that's the way the sukuk is structured. So it could finance public housing, and then rents from the housing could be, part of some of them could be used to repay creditors over time. I mean, they're many different types. But anyway, so innovative financing is other than standard financing.
Other than standard financing, and you're referring here to different ways for taxation and
Right.
investment. Now, how did these ideas make their way into the
Okay.
UN?
Right.
And you've written about the radical origins in the 60s and 70s of some of these ideas. So maybe you could tell us about the ideas and the thinkers behind them.
Okay, I think you're referring to the Tobin tax, which we have to actually sort of back up and say, once upon a time, the international monetary system, which was then called the Bretton Woods system, had fixed exchange rates. Every country that was a member of the International Monetary Fund fixed its exchange rate, the exchange rate of its currency, to the US dollar, and that exchange rate was allowed to go 1% above or below this fixed amount, and the US dollar was fixed to gold. And so there was a need to find ways to make sure that the exchange rate would stay at the right amount. And it involved monetary policy, fiscal policy, and so on. But as countries liberalized the ability of investors to move money in and out of countries, all of a sudden there were these speculative flows and herd behavior. And and the problem, of course, is if the investors lose confidence in the country and the money flows out, and then the exchange rate would fall to the bottom of the allowed amount, and then the country would have to put in foreign exchange reserves to prevent it from going further. This was a problem. In fact, the system broke down in 1971. Okay. James Tobin, professor of economics at Yale, said, I have an idea. We have these speculators. They are moving the money in and out of countries in order to profit from the expected decline in the exchange rate. Okay? So why don't we put a tax on when they make the transaction to go out and when they make the transaction to come back in. And then we reduce the profitability of the speculation. Okay, well, this became more, irrelevant because the whole system broke down. But the idea of a tax on currency transactions, just sort of rested quietly, moribund, until the 1990s. And after the fall of the Soviet Union, from 1992 to 1997, official development assistance fell 20%. Okay, that's quite significant, right? And agencies that depended on ODA scrambled looking for money. And NGOs and academics and said, remember the Tobin tax, but all we need is a tiny tax. Tobin really didn't think about how the money would be used. He was thinking about, the disincentive to speculation. So, okay, a tiny tax, but there's so many transactions that it could raise a lot of money. So they had this idea, and it was called the Tobin tax, or currency transaction tax. And then, now, is that innovative? Yeah, it would be innovative if it wasn't done. Is the idea of taxing of financial transactions innovative? Well, not really. I mean, in the 1760s, the British Parliament had this idea that we will impose a tax, a stamp tax, on official documents and things of that sort, as well as printed materials, and we'll make the colonists in the Americas pay. And they thought that was a terrible idea. No taxation without representation. The colonies had no representatives in the parliament. And it was a big fuss, and a year later the parliament actually dropped the tax. But, I mean, it's an old idea. Some countries have financial transaction taxes. The UK has one for changing ownership of shares, equity shares. Brazil has a variety of financial transaction taxes. So, but the idea of the Tobin tax internationally was precisely that it was international. So imagine a small tax on everybody who's making an exchange of currencies, which is always through the banks. Now with crypto, it might be less profitable, but anyway, that was the only way to do it. Okay, collected internationally. So it would have to be, all the money would have to be put into some international body, and then it would distribute it to providers of public goods, now.
And that would be a novelty in terms of taxation.
That would be an absolute novelty, and terribly, terribly opposed by the U.S. They hadn't forgotten no taxation without representation. Jesse Helms, a senator from North Carolina, became especially upset about this. He said, it'll be a cold day in hell when the UN taxes American citizens or taxpayers. Okay, so this was not going to work as an imposed tax. On the other hand, there were ideas like on a financial transaction tax, in other words, not just changing currencies, in fact, not involving changing currencies, but purchasing and sale of financial assets in the European Union. They almost adopted it. They didn't. France did adopt it. Okay. So that's kind of out there. As a kind of financing for development.
The proceeds of the French tax were remaindered for development?
No. Okay.
Not the
well, wait, first of all, you asked, how did the UN get into it?
Yes.
Okay. This was not the UN getting into it. This was a matter of individuals who happened to work for the UN, in particular UNDP, saying, aha, I can solve our lack of core funding.
Right.
Okay.
With new, predictable, additional funds from taxation.
In 2000, the General Assembly had a special session to follow up on the World Social Summit in 1995. And one of the issues that some people brought was, we ought to look into innovative sources of funding. Then it was called new and additional. I don't know who changed that into innovative, but somebody did. I guess, yeah, okay. Well, in any case, that was a big fight. But in the end, and I wrote down here what they agreed, because it's diplomacy, so you have to pay attention to the words. Yes, there was a text that said that they agree that, in fact, the Secretary General would conduct a rigorous analysis of advantages, disadvantages, and other implications of proposals for developing new and innovative, there it goes, sources of funding, both public and private, for dedication to social development and eradicating poverty. Okay, that was 2000. What happened? Nothing. Absolutely nothing. The Secretary General didn't touch it. DESA didn't touch it. UNCTAD didn't. Nobody touched it. However, didn't die. Come the UN Conference on Financing for Development in Monterrey, Mexico in 2002, this sentence is added. We agree to study in the appropriate forums, whatever they are, the results of the analysis requested from the Secretary General on possible innovative sources of finance. Okay. This time, there was a response. And Dessa worked with Wider, UNU Wider, and produced a book, which I imagine you've seen. Okay, now, in fact, there was no way to get a consensus to work on these things. However, there were a number of governments who were interested, and 4 of them, France, Spain, Brazil, and Chile, formed something called the leading group and invited others to join and said, look, let's figure out some innovative ways to raise money, okay? And they were formed in 2006, and they thought up the air passenger tax, which is to say there's a small tax if you fly in or out of France, a small tax that's added to the cost of your ticket. That money is collected and all of it goes to unit aid for vaccines, right? Okay, good deal. They also looked into the currency transaction tax, financial transaction taxes, and so on. And another deal they did, which was kind of interesting, that if you need funds for, let's say, for vaccines or for research on vaccines, you want them right now. You want a lot of it right now. So they cooked up this idea where the aid agency, in fact it was the Brits that did this, could go to the financial markets, float a bond. The bond would, then the money from the bond would go to the research. Okay, so a lot of upfront financing.
This is the front-loading concept.
Yes. And what would happen then is that the payment of the interest and then the principal at the end on the bond would come out of future allocations to the aid agency. And that was done. And that proved to be useful. That was a way to get more money than the Parliament was willing to pass as a current funding.
So by 2010, you have both Unit Aid's Solidarity Levy established,
Right.
and the International Financing Facility for Immunization using the front-loading
Yes.
to fund Gavi.
That's exactly.
Okay. Could you talk a little bit about the legacy of those 2 initiatives? Because they really are seen as success stories and referenced a lot. There's been attempts at replication. I think perhaps more successful on the front-loading or capital market side than the solidarity levies. What was the legacy of these efforts in the mid-2000s?
There was additional discussion. The leading group met, and they brought in agencies as well as governments. But I don't think anything else took off, And gradually, the leading group got more invested in finding clever ways to engage private finance. Now, the standard way to finance public investment is private finance, right? So, why do you need anything beyond that? Because investors find the creditor, the borrower, maybe pretty risky, and they want to get their money back. Okay, so there were various ways to do this, and they're not new. I mean, so the World Bank, through the IFC, the International Finance Corporation, did something as long ago, I think, as 1969 or so. Maybe 1960 even, called B loans. So the World Bank would assess a project, agree to fund it, but also agree that, or welcome, if private investors wanted to pay for, invest in the project. And For the private investors, it was a good deal. You had the whole technical team of the World Bank assessing the project. It had an sovereign obligation to the World Bank to pay. You know, even if a country defaults on its sovereign loans, the only loans that don't get, under usual circumstances, don't get reduced are loans to the World Bank, the IMF, Inter-American Development Bank, and so on. But that was, you know, a long time ago. So then, you know, there are different schemes of guarantees and other forms. In fact, this is what the private sector does. I mean, you know, if you can securitize housing mortgages, in essence, an investment bank will buy mortgages from a bank that issued a mortgage. The bank has money to go lend again. The investment bank puts these loans together, puts these mortgages together, issues a bond and say, I am going to service this bond with the payments people are making on their mortgages. Totally private sector. Actually, it was originally done with, you know, Ginnie Mae's Government National Mortgage Associations in the U.S. For guaranteed mortgages. But, you know, the concept is something, you know, these Wall Street guys are always thinking of these schemes. But that's more, it seems, of what innovative financing is today.
So we've moved from ideas around a Tobin tax and pretty focused on taxation in the 60s and 70s into the 2000s. There's an expansion into looking at securitization and capital markets, leading us to today where it's kind of a big umbrella term for all sorts of ways to de-risk private investment with small bits of public money. Is that accurate?
Yes, that's the idea.
That's the idea.
Well, in the case of, say, the World Bank and the B loans, you know, where did the World Bank get its money? It borrowed it. It issued its own bonds. So that's private money that funds the World Bank's public loan in cooperation with another private loan. So, you know, basically, investment, capital formation, basically comes from savings, private savings, in one way or another.
I want to ask a question about the limits. I think we've gestured towards some of the limits of innovative finance as a concept, but at our recent workshop that we had on innovative resource mobilization for international organizations, one of the participants remarked that innovative finance is good at mobilizing millions, not billions. Do you agree with that? Or what do you think the speaker meant by that?
Yeah, no, that's what he meant. Well, first of all, why were you having this meeting? It's because there's not enough funds for, well, even, especially for the expenditures. The UN agencies don't do investing. UN Capital Development Fund, it's in its name, maybe, but they're tiny. But basically, it's current expenditures. Okay, so how are you going to fund this? From taxation. I mean, you know, current expenditures are funded generally from tax. Or you can fund it from private donations, charity. This is not new. UNICEF has been doing this since 1950, right? Trick or treat for UNICEF in the US, and I think they do this around the world. But, you know, and there's more of that. Apparently, the Refugee Agency has started doing it. Okay, so I would think for expenditures, for technical assistance, for you know, food aid, for medical assistance, for, you know, so many things, you need current funds. and you need it from, you know, a current source. So it's not an investment.
Yeah.
And I'm less worried. I mean, you, as I said, basically the money for investing in capital projects, one way or another, comes from private savings. But current expenditures have to come from current revenues, right? And you know, you get the government that you pay for, and you get the international system that you pay for. So there's really no way out. But it's warranted, for goodness sake. You know, we want these projects for children, and we don't want people to starve. So we have to put up the money.
I want to ask you about member state perspectives on these issues. Because the understanding of innovative finance has changed, and also the urgency of additional sources of finance or funding beyond ODA has become so critical, how have member state perspectives on this issue changed? For instance, you said, you noted earlier the decision to study the advantages and disadvantages of innovative finance, and that struck me as a kind of framing that you wouldn't see today. I think it's accepted largely now as part of the landscape, perhaps at the cost of some precision, but it also suggested that member states, perhaps North and South, had some concerns about this concept. What were those?
Okay, the concern in the South was this would be a substitute for ODA. You know, the UN has this target that was adopted in 1970, which was based on some studies on the balance of payments of developing countries in the 1950s and 60s,
Right.
And how to close the savings investment gap. So anyway, so that it has nothing to do with that anymore.
Yeah.
But the target still exists, 0.7% of gross national income of the donor countries. So even in the Monterey Consensus, when it made reference to doing innovative financing, it should not be at the expense of development assistance, right? So I think that was the core fear. The same thing happens with you know, environmental funding, global warming funding. I mean, the delegates are very insistent that you keep development assistance separate from you know, mitigation and even adaptation expenditures, right? Although the overlap is huge. So I think that was the issue, and I think the other issue in particular of the donors, in particular one large one, is a belief that the UN is very inefficient and that you could get more bang for your buck if you do it yourself.
Do you think that idea has spread among donors, or?
Yeah, well, now here I only know that this is currently under discussion, right? The Development Assistance Committee is working on, you know, what are we doing here?
Yeah.
You know, and there has been a controversy since when? Since maybe around 2010, maybe earlier, about something that the OECD, the Development Assistance Committee, cooked up, which was we should consider that some private funds do development work, right? And so we should have a way of capturing that. And it was not official development assistance, but it is development cooperation, and we should measure that. major controversies of, let's not confuse ODA with that. And then there's a question of cooperation from the south to south, right? And some donors from the south prepare data using the same standards as the Development Assistance Committee, and it'll be reported as such. Others don't. But there's an awful lot, well, a lot, but not nearly as much as the developed country donors, an awful lot of assistance from the South to the South. And some of it under terms that are not very transparent.
So I want to ask you a question about the South's role in innovative finance discussions today. And it was quite significant that some of the biggest champions of new innovative taxes for development or solidarity levies have been developing countries. Barbados, for instance, made this an important part of the Bridgetown initiatives. You had the African group making statements in support of new modalities, and the Global Solidarity Levies Task Force was formed with France and Brazil, two of the originators of the Solidarity Levy idea, and yet we haven't seen much practical action on that front. So what is the role of Global South countries today in pushing innovative finance, and are there lingering tensions?
Yeah, I think the issue is not the South versus the North. I mean, everybody wants it as long as someone else is going to pay for it, right? So the answer to Jesse Helms is to make it voluntary. And I think in France even, I think the air passenger tax is voluntary in the sense that you can opt out. But you have to actually opt out. Okay. So imagine a financial transaction tax.
Right.
Well, you've read my paper. I have a proposal on a crypto trading transaction tax. Very small taxes, a lot of crypto trading. Okay, imagine that you brought together the billionaire owners of these trading platforms, and you say, look, you don't like to see starving children, you don't like to see, refugees in such trouble. Why don't we have a little fee, and it can be, just pennies on a trade, because there's so many trades, and then we will set up an agency that we will manage, because all the funds should be paid into this.
Like the French Treasury has this dedicated fund that collects the tickets.
Okay,
Yeah.
for example, right. And, but we'll have, then the question is, how do we allocate it? Okay, for that, we need a kind of universal group. Countries from the south and the north somehow figured out. And they allocate this according to principles that, let us say, the General Assembly would agree to, because you want them to be consensus views on what are the most important things. Okay? So, and you could make it opt out, you make it voluntary, so you can say the crypto trader can save 10 cents if he opts out. My guess is they won't they don't opt out.
So there's the domestic or the individual solidarity element that's built in, but there's also this international solidarity component, and that seemed to me to really enable this to go forward. That is, earlier ideas around a global body that imposes an international tax and then the proceeds are redistributed, was a no-go. But a coalition of countries that nationally agree to do it. It might not
Doesn't
even be a
mean-
choice for the consumer, but nationally, that allowed the political agreement to move forward.
In what I just proposed, there's no government. It's the trading platforms, okay? It's their money. I mean, they are taking it from each transaction. Now, if it were an agreed tax, yes, then they would collect the tax. Well, in my paper, I had originally put it as a tax that had, since the trading platforms have to report to the tax authorities, because there's capital gains taxes that will be required, right, to be paid by the investors. They're reporting to the tax authorities anyway, so they could report the amount of the transaction tax and transfer the funds. And then that could go to an international public entity. Or, as I said, it could be done privately, just saying, you know, we crypto billionaires are really not bad people, you know, we could do this. And we hate governments, you know. But they also hate, let's say we hate poverty, they hate poverty too. And so I don't know.
Right. Well,
this is you and me talking.
Yeah,
you
I
know?
know. And I'm trying to pin this down because I want to ask you as kind of a closing question to bring us up to the present and what is different about today and how that might signal the opportunity. And we started the conversation talking in the 90s. You mentioned that there had been a 20% drop in ODA in the 90s. And this is in the post-Cold War moment where a lot is being asked on the peacekeeping side, but the development side and the funding side is not forthcoming. I'm looking at the present. As you know, 2025 had a 23.1% drop in ODA, largest on record.
Right. In only 1 year.
In only 1 year. It's really
Not 5, yes.
Shattering
Yes.
this concept. At the same time, though that was true in the 90s to an extent, there also seemed to be a lot more openness from interest in the private sector in kind of the birth of ESG and corporate governance, and the idea that they have an incentive to do something good in the public interest and in a way that gives some of that they don't have the sovereignty over the whole process. That is, it wouldn't just be them deciding we're going to have a crypto, a foundation, and we're going to give some money away, but that they'd be engaging in this partnership. It seems to me today that with the ODA crash and a more skeptical, let's say, private sector, or a private sector that's not giving that green light from governments, that we're maybe in a new era. And I'm wondering, in that context of the ODA crash, which suggests that we may not be able to do as much as we want in terms of de-risking or these blended vehicles, and a new corporate consensus, for instance, moving away rapidly from investments in renewables that were made possible by government support a few years. Where does that leave innovative financing today? Can you think of any opportunities that doors closing might open elsewhere?
Yeah. This is a hard question. You would ask it.
Of course.
I can imagine initiatives around particular issues of particular countries, not anything global, not anything universal. Uh, and yeah, I suppose one of the issues some people now are writing about is you have all these new super billionaires, and they're also starting up foundations. So what are they, the next Bill Gates? Bill Gates financed more health than governments. Maybe that's not right, but anyway.
I believe a majority of, or the largest contributor to the WHO, so yes.
Yeah, okay. So then the good news is that you have the money. The bad news is that those are his priorities. So I don't, this is not really an optimistic moment. Although it'd be interesting if, groups of, right now, I suppose the most seriously affected countries from the current situation are in Asia, Southeast Asia, East Asia, and there's the Asian Development Bank. So there could be emergency lending and so on. Could they then say, most of the countries are not poor, they can and do raise significant tax revenues. I can see innovations, and you have ASEAN, so you have a structure that, that could, it hasn't, but it could, add an additional function to what it does.
And perhaps a desire to achieve something in terms of diplomacy or leadership.
Yeah.
In a way that you might not see in traditional donors.
We also have the issue of the Chinese money. China is not expanding its assistance or its lending the way it had in the past. So that's possible. I like the approach the IMF is taking in saying to countries, if you're not raising 15% of your gross domestic product in tax revenue, you're not serious about having a functioning government and providing services and developing. The problem is in how to structure the taxes. The way that the fund has traditionally advanced is value-added taxes. Of course, it's harder to cheat with a VAT than it is with an income tax.
Right.
On the other hand, income taxes are progressive, and as more of an economy moves into the formal sector, becomes more possible to tax incomes. But still, governments do it. I think also, if governments are doing it, and it has to be that people think that they're getting value for money, right? That's a starting point. That's at the domestic level. Works at the international level as well. You have UN 80, right? So, which is essentially firing people or not filling empty posts. Is that a strategy? Obviously not. And I suppose, given this is already June, that really it'll be for the next Secretary General to devise a strategy with the General Assembly and the Security Council on what this organization will be about. And then go about delivering the goods. So I guess I'm not very hopeful in the short run, other than for groups of countries that already have a relationship with each other. Latin America, Africa, and so on.
I think that's
That's
a great
my
place.
story.
I appreciate you sharing your story, Barry. Thanks for a great conversation.
Oh, my pleasure. Thanks for a great set of questions.